Hi there, I'm Dermot McDermott bringing you an update on Italy with Schulz from Berenberg Bank in Frankfurt. So Berlusconi recently vowed to stay at the centre of Italian politics. Despite his expected expulsion from Parliament over a fraud conviction, Italy can clearly not afford this political instability. So Christian, what are your views on what Berlusconi said and how do you see the political situation playing out?
Yes, political instability is very costly for Italy. You can even measure the cost of the political instability if you compare the borrowing costs of Italy with those of Spain, a country with much more political stability. In February, before the Italian elections, Italy paid 100 basis points less for 10-year bonds than Spain did. Now Spain is paying the same amount as Italy. So if it hadn't been for the political instability that we have in Italy, the country would be paying much less for its huge debt pile. So you can see how there's a real cost to political instability. The longer this goes on and the more dangerous it becomes, the more Italian taxpayers will suffer because they will have to pay for this disaster.
And also this week, a government source said Italy is highly likely to raise value-added tax in October by 1 percentage point. What are your thoughts on it?
Well, the Italian government, ever since the beginning of the year, ever since the Monti government ceased to function, has been a bit more lax on the fiscal side. They've stimulated the economy by paying down areas, for instance, to the private sector. Some other payments have been made, such as the installments for the ESM and other payments. So the deficit has got a little worse than planned, and that now means that Italy is running the risk that Brussels will be writing next year's budget again, which would impose massive austerity potentially. So now Italy has to preempt that by using the last 4 months of the year to get the budget figures in line again. Now the VAT increase is of course something that works very quickly and is usually quite easy to do. At the same time, it hurts the economy, it hurts growth. And that's also why parts of the coalition, especially the centre-right under Berlusconi, opposes it. It just seems that it's the only tool left to get Italian finances back under control and to remain out of the clutches of Brussels for next year. So there's quite some pressure to do this.
A government source also said the finance minister was considering delaying the target of a balanced structural budget from 2013 to 2014. Now, Letta has many problems to handle, and we also have disappointing industrial production data. So, can you tell us more about your views on Italy's bumpy economic path for the coming months?
The Italian economy has underperformed our expectations this year. The Monti government had last year already delivered all that was needed in terms of fiscal reform and had only left a few structural reforms for the next government to do. Unfortunately, because of the stalemate after the elections, nothing has been done on the structural reform side, and on the fiscal side, it's even gone into reverse. That now comes back to bite Italy, while countries such as Spain, Portugal, and even Greece are speeding ahead and returning to growth. Italy seems to be lagging behind. It's not done its homework. Of course, more austerity is going to hurt the economy. So the idea to delay the day of reckoning is a charming one for Italian politicians. However, they might be breaching EU treaties that they've signed themselves, such as the Fiscal Compact, and that would put them squarely on a coalition course with especially the Germans, but also the Brussels and the ECB, which could spell bad news for Italian bond markets once again and make the situation worse. The Italians should get their act together. Political stability is the first duty. The second duty is to resume the reform course, to unleash the potential that the Italian economy no doubt has. And ultimately, Italy is a relatively stable country. Its economy is much more balanced, much more diversified as the economies of countries like Spain, Portugal, and so on. So the potential is actually quite good for Italy. It just needs to deliver on it.
Thanks, Christian, for that. Well, viewers, do stay tuned to Dukascopy TV for more economic news and forex updates. Goodbye for now.